Welcome back, everyone. My name is Paul Kelton. I'm the host of GRID Charleston, and this recording is from our most recent live event, How to Buy a Neighborhood in 2026, where I interviewed our special guest, Jarrett Hodson. Jarrett Hodson has over 20 years of real estate investor experience. He has been buying properties since before 2008, and he uh, is really great at analyzing the area that the property is in, and not only buying one property, but buying multiple properties in that area and ultimately transforming the neighborhood. He talks on a lot of really great points about being an activist investor, and not being just a passive investor, about analyzing trends and being a first mover into the market. I want to spend one moment and thank our sponsors for making this event free for everyone. Though our sponsors are Coastal Equity Group, Matter Real Estate, Tide Property Management Co., Mitchum Law Firm, Coastal Creative Media, and Sweetgrass Capital. If you are interested in joining GRID Charleston, if you are interested in attending an event, we host them every single month on the third Tuesday of the month at 5:30 p.m. Doors open. The event starts right at 6. It is a live question and answer session, a live interview, and it is a mastermind session in small groups. I hope you can take as much value from this interview as I did. Thank you guys for coming out tonight. This is our last night of the year, so thank you guys. Out of curiosity, how many hands is this your first event this evening? Thank you guys for coming out. That's awesome. So I'm this time of year, I always get really grateful. We started doing these events 6 months ago, and we've just had tremendous turnout. I've seen people partner on deals from being in the room. I've seen people make connections. Hey, how are you doing? I've seen people make connections that they didn't have before, partner with lenders, partner with property managers, partner with, new people, partnering with older people. So I think it's just great, the room that we have and the platform we built. So it's just so much gratitude that I have for you guys for showing out every single month. So for those of you who are new to GRID, our mission is really simple. It's do deals, build wealth, and create impact. So those three things, that's all we're focused on. We're building a community. We firmly believe that your network is your net worth. And you do that by building a community here. So I'm really excited about this event that we have this evening. And I'm also really excited about what we have in store for 2026. So before I get started, I just want to take 3 minutes for everyone. I know that we had a lot of people just sit down. Just go around your tables for the people who are new or the people who just sat down. Just introduce yourself, say who you are, why you're here, and what you're hoping to learn tonight. So just take 3 minutes and just do that at the tables yourselves. If you've ever been curious about how people assemble parcels, how people create outsized returns, we have so much in store for you this evening. I'm so excited to talk about how to own a neighborhood in 2026 with my good friend Jarrett Hodson. Before we get into it, I just want to thank the people who make this event free. And that is our sponsors. They make this free every single month, free for you guys. So I wanted to end this year strong. I've worked with this guy for years. I worked with him on the mortgage side. He has a really great mortgage company as an agent, referring my clients over. I've worked with him on the investor side. He's been a client of mine in the past. I've sold property for him. I've invested with him in a deal that he's had. He's one of the smartest and savviest real estate investors that I've met. He has just outperformed the market, has done a really, really great job. I'm really excited to bring up Jarrett Hodson this evening to talk about how to buy a neighborhood. So come on, Jarrett.
Thank you, Paul.
Yeah, thanks for coming.
Yeah, of course.
Jarrett, can you just give us a brief overview? How did you get into real estate? And how did you find this strategy that we're going to be talking about tonight?
So it's probably not whenever I got into real estate, but I went to the Citadel. I started in 2001, and there was probably two major things that happened in 2001 going to the Citadel. And one is is like 9/11 happened, and that changed kind of everything from my Citadel experience. My first week there, that happened. That kind of threw off the trajectory of the Citadel experience. But it was also being downtown in Wagner Terrace. And whenever we got there, they were kind of giving us the lay of the land, and they said, Wagner Terrace is not a safe area. But however, if you are in groups, and keep in mind, this is like 18, 19-year-old military guys, it's safe now as of this year to run in Wagner Terrace. So it was my first real estate experience was really seeing the development of this area that most of you know, all of us know, Wagner Terrace downtown, go from, at the time, it was 25, 30, $40,000 houses, to now, I mean, a million and up, really. And that was really an enlightening thing. It was missing out on that, or going, graduating, seeing like, damn, like that's an incredible thing. A lot of people made a lot of money.
I can't
all around there.
imagine Wagner Terrace having $30,000 houses.
Yeah, when we're talking about tonight, is really just history repeats itself, though.
Yeah.
So,
Yeah. So you went to the Citadel. You saw the turn of the neighborhood of Wagner Terrace.
yeah.
And that kind of inspired you to get into real estate.
So I'm in the mortgage side. Sweet Guys Capital is my company. Cole is my top loan officer. And so I was seeing a lot of transactions, and keep my eyes peeled. But I was taught, or what I saw from a real estate investor was looking at, if you're looking at a deal, what you're looking for is to just buy a house in a area and try to get it less than the comparables. So if the houses are selling for $300,000, you might get it for $260,000, and that is a great deal. And but really, what I was looking for was a comparable to Wagner Terrace, to see the houses that would outperform the market and go from $50,000 to $1 million, and see those outside returns year after year. And so I dabbled in a few things, and then whenever I really started making a commitment and started buying, and having a focused plan, was I saw an article in 2015, 2016, so not too long ago, maybe 10 years ago, that the worst street in downtown Charleston was Cooper Street. And if you go down Cooper Street now, you will, it's definitely not the worst street. And whenever I went down there, I was like, there's live oaks on either side of the street, but over half of the houses are abandoned. And so that was an entry point for me where I could start buying houses very inexpensively. And I wasn't going in there and buying based on the houses being slightly less than the house, or trying to over negotiate. I was just, hey, if I could buy every abandoned house on this street and make it not abandoned, what happens in this area then? I didn't need to worry about overpaying for a house, knowing there's a plan here. And the piece of the plan too, of course, is knowing that you have the financial ability to then do that, to continue buying. So you have to like buy at the right price, or go into at the right point in the neighborhood, and then you can keep doing that. But houses downtown are, you guys know, $1 million plus now. I mean, I was buying stuff for 200,000, 250 back then, and just bought enough of it where I could control that piece.
I like how you said you read an article that Cooper Street was the worst street in Charleston, and you said, I'm going to invest my money in there.
Well, it was like the worst. Yeah. I mean, buy the worst.
So many people I talk to would be like, I'm going to steer clear of that street because tenants are going to be really hard to manage. And, it's not a proven concept. I don't want to be a first mover in the market. But you're saying, go be the first mover.
Yeah, listen, in like any kind of investment strategy, you're probably not going to do well by just going with the masses. You have to do something a little bit different. You're also going to do something a little bit hard. So real estate investing, I own restaurants too, and that's hard. That's a lot of numbers. It's extremely hard. But with real estate investing, it is just making it slightly harder by owning in an area that people don't want to own in. So I created almost like a niche by going to these areas, and and it made sense. People don't want to invest in there. The majority, the 99% do not want to invest in there. I understand why. They don't see it as you're going to go in there and buy everything in there, and you're going to be this, I've said, like an agent of change to this entire area, and effectively flip the entire neighborhood. It
So
also takes more time. It's not just like a quick, hey, I'm going to jump in here and this house is, I'm going to buy this house for 250. This is for 350. So if I do work, this house is going to be worth for 300. I'm going to make $50,000. I'm looking at a much longer horizon here. I mean, a much longer, listen, but again, it was maybe 10 years ago,
so one term you used multiple times in our when we spoke last week was the term activist investor. So what do you mean by that term, and how is it different from how most people invest?
So if you could invest in any possible way, whether it be the equities market, like the stock market, um, any type of market, it's effectively insider trading is what I'm trying to do, or what I'm doing. And that just means that you have insider information. Now, insider information happens to be, I'm going to go and I'm going to clean up this neighborhood. I'm going to be the neighborhood dude Karen that's going to call the police and complain about the gutters whenever they're full, the house that parties all the time down the street, the guys that are selling drugs out of their house. Like, I'm going to be that guy. I'm going to be an activist in that. I'm just not going to look on a map and circle a house and buy it, and then whatever happens with that area, that happens with that area. Being an activist investor means you're going to go in and you're going to take an active role in controlling that neighborhood and controlling the product. You're going to go in there and do something simple like pick up the trash. Whenever you go in there and you find a neighborhood, we'll talk about this later on, but like how to identify it is you're going to see like trash on the side of the road. Hey, if you picked up that trash, the houses are probably worth more. That's a crazy thing to think about. So you have that insider knowledge that you're going to go in there and do that other people outside of the neighborhood do not have. It's super simple, but it's you can imagine how easy that is, how effective that is.
Why focus on buying multiple properties in the same area instead of one-off deals?
It's like there's an old adage. I don't know if it's something biblical or not, but it's a shallow mine versus a deep mine. And a shallow mine is whenever you go in and you can scrape off the profits. It's really quick. You go in there and the gold, you shift through and you find the gold on the top, but it's going to take some more effort. But you're better off allocating your resources to digging that mine shaft and staying in that mine and finding that gold vein and beating the shit out of it. I mean, hammering, stay in that same area. You're going to have better long-term returns than that person with a shallow mine. But of putting in the work on the deep mine.
Uh, I love that metaphor. Tell me, I guess, with the mine being, let's say, Cooper Street, because you brought it up, when did you first buy a property in Cooper Street, and what did that timeline look like for you?
It was almost as soon as I saw that article. Like I had never been to Cooper Street, and I mean, almost immediately went down there. There's a little bar down there called Fairdale Grocery, which I now have. I got a 20-year lease on it. But I got the whole thing. So I went down there and they had like, you could, I mean, there were like no rules kind of thing. There was no open 24 hours a day kind of thing. Like, and, but yeah, I mean, it was just going down there and listen, it, my big thing is like, if I have this idea or I'm going to do something, it's like, I'm going to take immediate action. So it was pretty immediate. So look up whenever that article was done, and it was within months that I was buying my first house on Cooper Street.
And then
I don't know
what?
if I got a deal on it or not. It doesn't really matter. Now, you looking back on it, it's an incredible deal.
Yeah. So what was the next deal? Like, did you just find it on MLS? You started buying up stuff that
Yeah,
came on MLS, or did you
it
talk to
was,
sellers, or?
it was knowing the neighborhood and working the neighborhood. Like the thing that gets tossed around a lot right now is, people talk about like off market deals, and like they think that you say, I want off market deals. But if there's a mass mailer that goes out of these off market deals, they're not really off market. So the only way to get these off market deals is you got to be there and know your neighbors, and know what their lives are, know what's happening, um, know who's about to uh, have a situation, and just knowing your neighbors. It's like it's being that activist piece where you cannot do unless you are there, especially early on. You cannot do unless you're there, and that is how I was able to meet the neighbors and then just start like piecing these houses together. And a lot of the stuff was abandoned houses, so it's you're dealing with like multiple with like heirs, where you had to meet one of the heirs and track them down and find them, and then but it was I had a major advantage because I was able to build relationships. Hey, listen, I'm here. I want to buy this, and because I'm here and I want to make this area better.
Mhm.
I'm not going to just buy it and fix up and sell it. So I had a big advantage over other potential investors in the area. One, because they didn't know it was going to be listed. It wasn't listed. That's true off market, but it was forming those relationships within that neighborhood.
That's great. What do you think is the biggest mistake new investors make when choosing to buy their first property?
Um, I think it's not looking at the long term horizon, and then I think a lot of new investors uh, get caught up in watching like too much YouTube stuff and getting into too many spreadsheets and what everybody else says. Uh, and I see them go in, and then a lot of times they really underestimate if they're going to go in and just say, "Hey, I'm going to power through this. I'm going to flip this property. I'm going to go in and I'm gonna budget this amount to rip out the walls." And if you go in that way on your first one, you're gonna 100% of the time. I've never seen anyone accurately budget for that. Once you open up walls, contractors cannot tell you. People hate contractors, but the reality is they don't know what's going to happen until you say, "Well, yeah, maybe we should knock down that wall." Well, you do that, and then it's like it unravels really quickly, where the budgets can go completely nuts, and you've allocated this amount, and all of a sudden it's going to be significantly higher. So I see them really underestimating budgets, underestimating the scope of the project, and they're just trying to do things thinking it's going to be a 1, 2, 3 month project, and not allocate. I mean, unless you've done it a bunch of times, even doing it a bunch of times, I can't get my numbers like nailed down.
Mhm.
That's Paul. I can't get it where it's like, especially on these like old historic homes, where permitting comes into play, and you have the city that'll put a stop work order if something seems off, and then you have to get that. It's extremely difficult. So it's going in and thinking, or with you've got a fairly limited budget and your budget is going to cover the renovation, and thinking that you can get it done. But my strategy would be uh, you're not going in with that short term horizon. I mean, you're going to go in and you're going to move in there, and you're going to be in there, and uh, it's not the end of the world if something happens in the first 30 days that is unaccounted for. I mean, and it will happen too. It will happen within the first 30. Something will be unaccounted for.
So your strategy is to for new investors is to like buy a property in an area and then like be an activist investor and live there.
This would be my strategy. Like, and I've had to kind of think about it where a lot of people will come in that have invested a lot, and they're going to tell you what they would do now. Um, and I wouldn't do the same things now if I was, let's say, starting off like 10, 15, 20 years ago. And what I do now is and I've said this term, like I would buy around the hood. And and I told Paul that I said we should have a new strategy, and say Burr is dead, and say math is in, and that's move around the hood. Maybe it should be a bath, like buy around the hood. But and Paul, here's something funny. Paul said, Paul's like, well, how do you identify where that is? I'm like, identify where the hood is. Like, like that's easy. Like, but now is a great time to do it. You can go to these neighborhoods now, and you are not like tonight. You go out, you're looking for neighborhoods to buy your first house in. I would look at like 250 and down. I would start off within 526, and I would look for no Christmas lights. Like if you buy a house, you have this image in your mind. Like everybody has this image in their mind. They're trying to, even if they're in real estate and they're an investor, they're thinking they want a showpiece house. They want to show their friends. They want to bring their friends there and say, look at this great house. Look at how much I can afford. Look how successful I am. But if you have a long-term, let's say, I mean, long-term meaning like 10 years, that's not crazy long. You're going to go in and you're going to buy a house in an area and you're going to do things to try to improve that entire area. You're going to buy a cheap house in those areas. And then that house might be appraised. You might not get it. If it's a $250,000 house, it might appraise for $250,000. You might not be getting a discount on it, but just the fact that you know that you're going to improve that area, you're going to buy every single house in that area. Then once you start to make improvements, and buying the first one in that area is super, super, super simple. It's like the problem with me starting off, or most anybody starting off, is how do you get the funds to start off? It's nominal. If you actually buy it to move in there and be an activist in that neighborhood, it's very inexpensive. I mean, potentially zero down.
You had a story about a staff member of yours.
Yeah, I mean,
Wanna
the
touch on
best
that?
investor I've ever seen. She was she bought a house and it's just outside of Park Circle. It was like $80,000, $90,000, like maybe 4 or 5 years ago. And she really didn't do anything to the house. Just her being there, keeping the yard kept. And I wish I would have listened to her more, about the neighborhood changing. I mean, houses in there are $350,000, $400,000 now. She did we have a state house. We do work with state housing where it's an FHA with down payment. That's what she did. She refinanced out of that. Owes basically nothing on the house. I think her payment now is $400 or $500 a month. And, it's like a $400,000 house. And she's done very little work except for just basic maintenance to the house. And just by doing that, it's improved other houses around her.
So without
What's the
giving,
return? If you buy a house with no money down that goes up $100,000, it goes up to $300,000. What's the rate of return on that? It's infinite returns. It's
yeah,
like,
you put in
I
zero
just
money
wish
and it goes
I
up.
would have listened, and I would now. I would now listen to somebody. They're going to have insider trading information. She had insider trading information saying that the person that had the cars in their yard had moved out, or the person that everybody knew was selling drugs. There was always a problem with the police. They're gone. Zillow doesn't know that. A realtor, you cannot know that from the internet. She knew that. She knew those things. So I should have been listening to her and buying like crazy with her in that area. We should have been focused on buying there because she had information nobody else had. She also could tell you, hey, the houses down there, that corner, they all flood. They're all going to be totally jacked. No matter what it's going to be jacked. She had insider information into that neighborhood. And that is where we should have allocated way more capital than we did.
It's great. So without giving everything away yet, because I want to make this a little interactive, what's step one if someone should pick their neighborhood in 2026?
Well, I wouldn't even wait to 20. I would listen. The sooner you take action, the better. If you say, I'm going to do this in 90 days, it probably won't happen. If you say, I'm going to do it in 6 months, it's not going to happen. Okay, go, like, if you think this is something you want to do and you want to do something bold, go look tonight. I mean, go look now. You're not going to be able to find it on the MLS or on Zillow or something. But you can target those that you can see them on the map. You can see where there's little depressed areas. Like, why are they depressed? Well, go out there, drive to the neighborhood, go look at night, look during the day. You'll see the signs of what the issues are. If there's bars, that's it. Bars on the windows, things like that. Like, they're just boarded up. It doesn't seem like there's no lights on. Hey, I mean, that's what you're looking for. You're looking for the opposite of what you would imagine you would look for in your first house. And listen, people that buy, we're in the mortgage business. 99.9% of people are going to spend the absolute most they can on their first house. And they say, I'm going to do that because I'm going to live here forever. And 99.9, maybe 100% do not live there forever. So if you buy that house in that neighborhood that I'm talking about, those people, they're not going to come to the house tomorrow and say, wow, that's an amazing place. But in 10 years, they're going to come and, like they have with me, say, you are a genius. You are brilliant. You're not. You've done You've done the most logical, simple thing you can possibly do. You bought a house in a depressed area, and you've actually done some investor work, where you've done work in that neighborhood, and like work meaning like pick up trash, make sure that people don't have, if the old lady down the street can't bring out her trash cans, you do that kind of stuff. That's how you meet the neighbor. Just do like humanly things. Listen, and there's other benefits too. You're actually doing a good thing for a group in a neighborhood. Most people don't want to live that way. You're doing a nice thing for people, and you're doing something too. Like that house that was built that is the maximum at your budget. You move out of there, you're never going to see the house again. You come back, you do this in that neighborhood, you come back in 20, 30, 50 years and you say, damn, look at that place. Look how nice this neighborhood is. Like, I did that. All these houses, that's because of what I did. That's what I chose to do. You tell grandkids about. That's the like, and again, people are going to say that they're going to see how much values went up. You know, houses are going to, if you improve an area like that, you're going to see how much the values go up. And then people are going to come in after the fact. They're blown away whenever you see somebody that, wow, I had no idea this area is so nice. Like, hey, I mean, it is now. Like, it just doesn't take that much to do that. Or I would say it is work, but it's not like working in like the restaurant. It's way easier than whatever you're doing in your job, your day-to-day job, to improve a neighborhood like that.
All right, I want to make this interactive. That's why you guys are here, to build the community. So I've got one prompt. I want you guys to brainstorm for 10 minutes. Think about areas in Charleston that are undervalued or depressed, like what Jarrett said. Brainstorm amongst yourselves. Think about areas that might be a good fit for you. And then I want to take it back up and get live discussion about those areas. So talk amongst yourselves for about 10 minutes.
I would start within 526. Okay. Look for stuff that's in like let's say like $200,000 range. That's impossible to find in Charleston, right? House in Charleston's under 200. It's impossible. Well, it's not. Look in 526. Set your parameters to under 200,000. Start there. Pick out a few there, and then look at stuff that is fairly close to. If you're looking outside of 526, fairly close to like the highway, so you can quickly get on and off. You're not like 10 hours away from downtown Mount Pleasant, a place where people work, James Allen. Look at like, so then you then look like off of I-26 as you get further off of 5.
Let's hear from a couple tables in the room on the neighborhoods that you guys were discussing. I want to just get live feedback from Jarrett about what he would think about that type of neighborhood. So, is there any table that wants to go first? Elliot, let's go right here.
Yes, Scott said, sorry.
Give me an address. I don't know the neighborhoods, but a question I have for the group really quickly. If you looked like on Pix like Zillow or something, were you surprised at how many houses are under like $250,000, $300,000 within 526? I mean, it's like people don't believe that exists anymore in Charleston, and it does. There are houses under $200,000 within 526. We just talked about Marcella's listing. I thought that was a great one.
Marcella, what's your listing that you just sold? Woo! There you go. Congratulations on the contract. That's great. Yeah. So there's opportunities out there for 150. Yeah. So, a little bit, we need to flip the script. A lot of people are saying, oh, Charleston's too expensive. Charleston's overpriced. I could never invest in Charleston. But really, you look at a 10-year time horizon, like what Jarrett's saying, and being an activist investor, those numbers do work, right? They definitely work. There's a lot of opportunity here. What are some other neighborhoods that we were talking about? Dorchester, like off Dorchester Road. Yeah. Yeah. So that's that's outside of the 526 from what you were saying.
Yeah.
But it's still part of a major corridor, right? So
the twos, I spent 30 minutes just before this, just looking at like what would work. And it was 29405 and 29406, those zip codes. And it was like, I plugged in those, I did a search for under $275,000, and there's 100 houses, just did single families, multi-families.
Now, Jarrett, I have a question. What would, when we're looking at specific neighborhoods, what would immediately disqualify it? Is there anything about the neighborhood that you would say, oh, definitely not?
Probably not. I mean, like the scale of the neighborhood could be an issue where you want something that is kind of in a pocket of its own, where there's, I mean, ideally it's like there's some decent stuff around it. Um, you're like looking at like a circle of like a depressed area, where you can have the most impact. If the area gets to be too big, like a giant neighborhood, it'd be tough to do what I'm talking about, or have a noticeable impact in those areas. But I don't think there's anything that would disqualify me. I mean, if you have maybe if you have a train or blasting through the backyard or something, maybe. But I think there's so much stuff out there that doesn't have that. It's really just there are just these pockets of depressed areas still in Charleston, and it's like that's the that's it right now. That's where I would do. That's where I would go.
And I just want to open the room up. It's when you guys were searching for neighborhoods or specific opportunities, because I saw a lot of you guys had your phones out. Is there any questions or insights that you had when looking at those neighborhoods? Anything that you want to get feedback on?
Year and a half or so.
That's a good question. Does any of the agents in the room want to answer the question?
That prices are leveling out. We kind of forgot our figures moving down. I do see prices like leveling out, but not. We are seeing a little bit of price reductions. Yeah.
There's always there's just the floor out there for where home prices drop. There's always a strong market for this is the house that I can buy and I want a house for the entry level house. There's always going to be a strong market for that. There's a young demographic moving to Charleston that's going to be priced out. It's and the inventory, although it's probably much bigger than you expected, of houses in that price range, it is limited on what's still out there. But that it just there's a limit based on people. I mean, if you recently got out of school or you're just moving down here, like to be in at 250, 275, 300, I don't believe, and this is really for first time investors, like one of the keys is not getting hurt. There's just very little room to get hurt there. Where does it go down? Does all of a sudden that houses don't go below, that was 150, I think she listed hers for, but what does it go below that? How much lower could that be? In the worst type of market correction. Yeah. I don't know what Paul or you guys have seen as agents, but it seems like that the stuff if you have a listing for, let's say, sub $350,000, I mean, it's like, it goes as quick as it's ever gone, as opposed to some of the stuff like in my neighborhood, the $1 million plus stuff. It's a 6-month battle to.
I also think that homes just get more valuable. Yeah. Yeah.
It's back of yeah. Go ahead.
So this is for Jarrett. It's a general question, not what you were asking. When you were buying your houses, did you only look at houses that were actually listed for sale, or you?
My foot in the door was always stuff that it was typically listed. I would look at, um, my first choice is something that's been listed for a long time. Especially this time of year, it's great. Where somebody listed 9 months ago, they've gone through summer. I mean, if you put if you've been in, uh, where the put your foot in the shoe of that seller, it sucks. It sucks to have your house listed for an extended period of time, and you just get it's just like you just get to be to the point of just being done with it. So knowing that that's the mindset of the person that's just sitting on their listing, they're ready to take a quick offer and just be done. In a lot of cases.
Up front.
So I kind of started my real estate investing in a very similar fashion. It's kind of funny to hear somebody say it out loud. So thank you for being here.
Yeah.
Doing this. One thing that I ran into from an activist standpoint, well, two things really. But the first one was my soft spot for gentrification, and it was hard to get in these places and how raise the taxes. Municipality loved it because we hold a rental portfolio. but the people that have to move out as things go up. I wanted to hear your thoughts on that.
Yeah, I have no qualms at all with improving an area, and if that means that some people, the goal is not to have people move out. Our city is very lenient with how we assess taxes, and increasing taxes on people that have been there a long time. If you look at some of the tax records, there are people living in places that would be assessed at $1 million. They'll assess it at $50,000. So the tax thing really doesn't hold any weight. But most of those people in the neighborhood, uh, aside from the more nefarious ones, want improvement in their neighborhood and are more than happy to see it. And if they are an owner in that neighborhood, it's just to me, it's kind of silly to think that someone would be unhappy with someone increasing their property values.
Because you've gone through, you work in your phases, you've kind of got a comfortable portfolio in this specific location. And I remember we had a tornado threat not too long ago, if you remember. So I'm in North Charleston, and that thing's hitting right for us streets, and it could be devastating. The thought of expanding and spreading a little thinner has crossed my mind. But after hearing you, I'm just like, I think digging my heels back into that community might be a thought.
You go to a point, you see different things happening in the neighborhood, and the first thing is, you'll start seeing like the young kid, like the hipsters is what I would call them. Like the hipsters start moving in, and then the next phase is you're going to see, it's good. Like some women will start moving in, and they'll have like the giant pit bulls and like the scary dogs, and then you get to a point where it's like you just start seeing like people with like like little like what the fake dogs, the dogs that do nothing. What are they? Designer dogs. Designer dogs. So you get to the designer dog level, and typically at the designer dog level, you start saying like, I would not pay what people are paying to live in this neighborhood, and that's probably a good time to exit. That's whenever your mind's deep enough, whenever you're saying like, I wouldn't buy that house next door, because there'll be a time whenever I would love it if someone does this and then calls me and says, "Hey, Jarrett, like I'm doing what you said, and I've got this sorry, like the crackheads or the meth house is moving out. They're out. That's going to change everything in the neighborhood." Like I'd love for you to, but probably what you're going to do is you'll be so excited about that. You'll be the one, you'll just keep it a secret to yourself. And you'll be the one that's grabbing it and pushing it. But, yeah, I mean, as far as like knowing how to get out, I mean, it's like, and it's always tough then, but it is whenever you just like, hey, I mean, there's another place that I can go, and then you're going to have a replicatable business model. You'll have done it, and, you can exit that and have a bunch of cash to really do some fun things.
That's a really great question. Thank you for asking that question. Let's see that.
The activist investing philosophies that transferable to the multifamily.
I mean, sure. Look, listen, I want to be here to tell you this is like, I feel like a lot of when I was starting off, people give you uh, objectives that are just outside of your scope, like to go to multifamily. I mean, there is an easy way to get into multifamily, um, but I want to give you such an easy starting point. You can do it immediately. There's no lag time. It's super tough right now to find multifamily that works. And multifamily is also just a hold you're going to have. You're going to have more flexibility with a single family. Also, I'm talking about like literally moving in and being there. Whereas in multifamily, it's tougher to do that, because then you're going to have 2, 3, 4 neighbors. So it just makes it tougher. But I wanted to come in here and say, listen, it doesn't have to be like, I feel like a lot of people like me, I mean, I've got like Cole, and like I can kind of mentor Cole, but like me telling like a group of investors, like, go find a mentor, go find a coach. It's like telling like an orphan, hey, go find a family. I mean, it's just not possible for you to go do. That's not an actionable thing you can do. What is actionable is if you have $7,000, if you put together $10,000, go look right now, find a property tonight, and let's start making. Let's kick out some offers on those like 250 houses. It's not something you don't. There's not. It's not that hard. What I am preaching and what I've done is just. It's not that hard. Start with. The key is we just talking about the break, like, but it's you taking action, and the easiest way to taking action is to make the bar super low, something you can do immediately, and virtually anyone can do. I mean, as long as you're not sitting in a jail cell right now on this live stream, I mean, you can go do this right now. So, I mean, this is immediately actionable. It doesn't need to wait 60, 90 days. It doesn't take a ton of planning. If you buy a house in that price range, in the lower price range of the greater Charleston area, there's very little risk in it dropping considerably. I just don't think it will at all. But let's say, I mean, there's not a huge amount of getting hurt space there. And you're also going to be looking at it over, let's say, a 10-year horizon. I mean, it's a virtual lock. Just go, you can take a dart and pick one of these that I'm talking about. And it's a low risk and it's extremely high reward. From a dollar standpoint, and also from, just like I said, like, it's really, really cool to see a neighborhood change. And it's not just pushing somebody out. It could be making, hey, that grandma's got a better life because of what you've done around the neighborhood. I mean, I said, like, taking out her, it's not to buy her house. It's to show, like, this is who lives in the neighborhood. These are like good people. I'm not scared to be out in the street. Nobody needs to be, the kids can ride their bikes in this street now. That's just it's an overall, it's a net positive that's added to like the actual dollar amounts you can make from that neighborhood.
All right. What other questions do we have? Zach.
So you said long term. When you move into an area,
I'm not even saying you have to jump in and fix it up. Yeah.
it's your.
I'm saying that, so in the area of downtown that I've got a bunch of, that he's been referring to, and I've got some other stuff too that I haven't, but it was moving my office there. So that's how I moved there. And that's whenever we saw the major changes start happening. And so, yeah, I still hold on to that now. And, but then if you're living there, I mean, you're going to be more cautious with the neighbors, whereas opposed to having a far off land, you don't see it. You're 45 minutes away from the property. You're managing somebody else's. You don't care you actually care about this little area you're in, and in you caring, that increases the value of that area. It's the power too of just one person doing something amazing.
So I guess to answer the question, doesn't really matter whether to rent it or not rent it. It's really just buying the property.
The first one, yeah, I would, it's something that you're there. And then, yeah, the next one's, if somebody says, hey, listen, I'm going to be moving out or whatever, so you have those relationships. Yeah, I would rent them until you hit the point of saying, like, it's too expensive for me to here now. It's too expensive for me, or I can't justify the prices here. I'm like, damn, I'm shocked at how much it costs here. Whenever your friends come in there and say, wow, this is a great neighborhood, like, how much is it? You're like, you can't afford to live here. I've got a dozen houses here, like, but I bought them. Don't talk about how great you are, but that's the point where you're like, I mean, you can start exiting.
All right. We have just a couple minutes left. Any other questions from the room for Jarrett? Man, this is awesome. Okay. Jarrett, first of all, can we give a round of applause for Jarrett? This is awesome. Can we, as a community, how can we support you?
Well, I hope you guys do this. And then I do hope that if there is something in that neighborhood where you've got inside information on, that you will call me. You'll say, hey, Jarrett, I mean, guess what? What you said happened. These guys are out. This area is about to explode. It's giving me inside information in that area. And I'd love to buy in that area. And also buy, of course, like, listen, the entry point is just a standard, typically like an FHA loan with very minimal down. That's what my company does. That's what Cole does. And it's obviously, we're the mortgage company of choice for that stuff anyways, but you could help us there as well.
Awesome. Thank you, Jarrett. All right. So we I'm so excited. This morning, I locked in our special guest for January. January, we were talking about 1031 exchanges, reverse 1031 exchanges, other tax strategies for real estate. I have Eric Bradshaw with Bradshaw and Co. and his business partner coming in and speaking. He's one of the smartest people, one of just really intuitive with this stuff and knows the subject matter, one of the best in the city. So I am super excited to have him as a special guest. We're going to be talking about that in January. And we've got a lot of really cool events lined up for you guys in 2026. We've spent the last month going ahead and planning out all of our event topics, all of our special guests for next year. We are going to be doing our main event as always. We're also going to be doing a coffee event once a month. That'll be during the daytime. So I'm super excited about that. I'll announce that more later. I just want to say, kind of as we wrap this up, I'm really, a ton of gratitude for you guys this year. I do hope, we all work really hard. I hope you guys take some time, spend it with your families over the holiday season, and I wish you guys a happy holidays. So thank you guys for coming out tonight.